All right, there we go. Good morning and welcome, everybody. Thank you so much for being here. I do appreciate it. We've got both rooms running right now, Hit and Run Candlesticks and Right Way Options, because Doug is out on vacation. Please remember today at 10, 11, 11:45 Eastern, I'll be doing a live trading alert webinar. We're going to talk about something pretty simple, really, setting up the 3-8 trap. But I think I want to add the breakout of the top trap line. So we'll be talking about that and be focusing on that and looking at charts that might be setting up with that scanner. So I would appreciate it if, you could sit in. It's always nice to have an audience there. So, all right, let's talk about the market here. I've got the SPY up, and, we've had, depending on how you look at the market, depending how you might look at this as, oh, something horrible has happened. And believe me, I've felt that too. We've got this big bearish engulf that we absolutely must contend with. It's still there. Right now, based on where price is, I would have to say the bearish engulf still has a little bit of weight, still carries some weight. Based on a few other things that we're going to talk about, we're going to chop away at that weight a little bit. But until that bearish engulf is actually been basically kicked to the side, kicked to the curb, which that would be when price clears the top of it, we're still going to be in this choppy, a very concerning area, very, very concerning area. All right, let's just look at what's going on here. All right, so that's I better make sure that this line here is set to last price. There we go. All right, so there we are. So if we look back here, you can see that the 3 EMA is below the T line. To me, that's not good, that's bad. But you can see that both of them are still above the trend indicator. That's good. So this is where all that chop starts to develop. When you start getting one moving average crossing down below another, but yet the other one that we follow, these 3 moving averages, that's still holding up, and that creates chop. And I know for a fact that the majority of traders probably not, well, I can't say for a fact and probably at the same time. I know for a fact the handful of traders that I have spoken with all last week, and I have a group of traders that I talk with for coaching, and they all struggled through here. They all struggled. No one made any money. Now I'm sure somebody here made a ton of money, and they made money on positions too, but they ended up having other positions that lost money. So as a whole, their net win-loss, they didn't go anywhere. They didn't make any money at all. But all of a sudden here, now look what's happening. Price, now this is pre-market, okay? Price is above the T line. The the 3 EMA is above the T line, and we're still holding above the trend indicator here. Friday we had a monster reversal, absolutely huge, which that's great for Friday, but we need proof. I mean, that's something we're always looking for, is proof. So we need some, we'll call it follow through. I would be happy with a close above 527.30 here. I would call that good. I don't necessarily think we have to close above Friday's high. That would be nice. But if we can just hold right through here, I would be tickled pink. If we hold through here, that 3 EMA will be up a little higher. That dot, it's not going to be any greener, but there's going to be another green one over here. So I think the takeaway from here is follow the trend. Whatever trend you use, I use the 3, the 8, and the trend indicator here to give me my short-term trend. Also, the long-term trend is still up. For the long-term trend, there's the 34 EMA. That's still up. So overall, the bullish trend is still there. The bigger picture, it's the near term picture that just got really choppy, really messed up. We are not out of the woods yet, so let's don't get carried away. Don't carried away. There's going to be both longs and there's going to be shorts out there. Plenty of each, absolutely plenty of each. All right. So let's take a quick peek at the diamonds here. Diamonds have popped up with a morning star signal. We're showing a little bit of what I would call stability this morning, but we are a far cry from giving ourselves a bullish chart here. Now, I want to talk about that. Somebody else might look at a chart a different way, and that's okay. We have to stick with what we do. We can't be jumping around. Well, this over here looks like this, and I'm going to change it this week because this looks better or something like that. I mean, I consistently follow price, the 3, the T-line, and the trend indicator very consistently. So whatever you follow, you need to follow. And to me right now, the diamonds are still in a downtrend. They're still underwater. They are still a problem. If we look at IWM here, let's just get rid of all that. There we go. IWM looks great. We got a little messed up last week, didn't we? But notice the trend indicator here never turned red. So this means we were in some serious chop zone. And now look at us pop up. Friday, we've got a green dot here. Today, green dot. And then we've got the 3 above the 8 and the 8 above the trend indicator. So right now, IWM is working pretty darn good here. Let's take a look at the transports. These are very important. And man, I'll tell you, they still have a problem. Now, a great couple of 3 days here, but there's still a downtrend here. And until this downtrend is fixed, we could just have a simple problem or slowness, a choppiness in the market. The market can go up with just the transports or just SMH. It can be bullish, but sometimes what'll happen is it'll be slower, a little tougher, a little more choppy. But if we can get the transports up with SMH, if we can get them up like it's up to us, it's not up to us. Look at SMH. It's just if the transports will pick up a little bit of steam, SMH is already there. Now, I do think we're overbought. Well, this was on this candle here. I think I'm going to kill that right now. We've had a pullback. Talking about a beautiful 3/8 trap here for those that follow the 3/8 trap. That's absolutely fabulous. And that's a gorgeous chart, actually. So let's see if we can get that follow through here. Ultimately, we're going to need to break out over that 247.74 area, and then of course the high here. But that's the area I would be looking for to start with. All right, I've got a handful of stocks here that I think are pretty decent, pretty good looking here. I'm going to get rid of this 3 EMA right now. I don't much like it on my chart, to tell you the truth. It just clutters the chart. So if we took a look at COMM here, COMM, this is a nice little rounded bottom breakout setting up. And the target here, well, I should say the trade on this, the trade setup, the trade plan would be something like that right there. And that's monstrous. Look at that, 55%. Holy smoke. So we're setting up, we're in that 3/8 trap area, 3/8 trap breakout, which I like the breakout. It just shows that there's strength here. Looking at this, watch the dotted deuce right here. Let's put a line right there. Let's watch that line right in there. That would be a good place to maybe take some first set of profits if you bought this. Let it pull back, close it all out. It's likely to pull back a little bit. And then let's see if that doesn't move up a bit more. TSCO, this is an absolute fabulous looking chart. Look at that beautiful trend right there. Look how we did this right here. There we go. Look how we, let's take this high here. See how we popped up and then pulled back. Did the, the little test in here. Here we popped up, and now we're putting an inside day in right there. That's one of my favorite trades, is an inside day on a bullish chart that showed us some strength, and then a little inside day here. That makes for a good entry. Your risk is reasonable, and your reward is still where you thought it was. There's some targets I have up there. Almost 288, 294, and almost $300 up here. Another one, Nike. I mean, how can you not talk about Nike here? This is a rounded bottom breakout. Again, the whole trade plan, if you're setting up the trade plan, is from the 50 period moving average to the 200 period moving average. So there's about 8.5%, maybe 9%, depending on where you. Now it's going to be closer to 8%. So you see we've rocked up 2 days here, really nice. We're putting in an inside day right now. So I'm going to watch for that entry in here. And then why is that there? We better move this down a little bit. Here, we'll put one right here. And then you've got the dotted deuce up here. Look, these lines, they don't mean that that's where the price is going to fail. Those are just places we see in the chart, like this high right here. I mean, that's a known area for a pullback. So why not take some off the table? Or, I mean, if you want to keep it, you can keep it. Manage your trade. Manage your trade. Another place is over here where we've made this low. Peaks and valleys. Target areas are resistant areas. Resistant areas are target areas. It's the easiest thing in the world to see on a chart. Just look for peaks and valleys. And now we've got the dotted deuce right there. That's a very important line to me, around 98.50. There's the 200 period moving average. So our playing field is right here. And then inside that playing field is where we make money. Starbucks, I'm going to have to break down. I don't know that Starbucks has a future, honestly. I just don't believe in $9 coffee. And I know in the town I live in, there's Starbucks wannabes popping up everywhere, and they're taking business from Starbucks. So overall, the big picture, it's just hard for me to be a Starbucks fan. On the other side, check your attitude at the door, and let's just follow the chart. And if we look at this chart, we've made a low, a higher low, and a higher low. We've got some higher highs. There's the 50 period moving average. So just a simple trend. You've got a nice little target in there, 50 period moving average. We should put a target up here with these lows. Pretty simple. Now we trade that chart. Say from about here up that top line. That's a 5% trade. More than likely an $80 chart will be traded with options. Might be traded with stock with some folks. But with options, you're looking at a 10+% trade on this up to this 84. Be a little less to this 82 to the 50 period moving average. But it might be something somebody likes. Walmart, I bought Walmart Friday when it alerted on the scanner. It alerted right here because the alert that I was using was a typical trending alert, very typical there. Nothing special. Probably maybe the special thing that some people don't use is I want to be alerted only when it breaks out of the previous candle. So I'm not interested in catching it down here. I'm not interested in catching it here. I know it all sounds good, but the reality is it makes no sense, and it's only caught by very few people, to tell you the truth. So I want to be alerted when I see bulls in there. I want to see buyers. I don't want to see wannabeers. I don't want to see bottom pickers in there. I want to see buyers in there. So when it started moving up over that candle, that gave me the feel-good feeling that, hey, there's going to be buyers there. Now, that is not where I bought it. That's just where I was alert. I bought it a little bit higher. But right now, it's still looking pretty good. I still like 67, 68 up here. as target. Bank of America, I think, is doing wonderful. Let's get rid of all that. I think that's doing wonderful. It just, when you can put together, say, a stock making a trend, however you might draw your trend line. I'm going to draw mine like this. I don't know, other folks, everyone probably has a different way they draw it. I don't know how you guys, most of you will draw it. I'm going to use the trend indicator. That's what I use all the time. So I'm going to go from this point right up here. We're broken out. So what this does is it makes this area right through there tradable, buyable. Now what I'm looking for is that entry, which I'm not in this. Let's change this tool real quick, if I can. There we go. There we go. So a nice little entry here. And then what we're looking for is the follow through moving up. Now we all know that you're going to have probably a little bit of confusion, a little bit of a pullback maybe, something like that. So nothing goes straight up. Either way, I like Bank of America going forward. Charter. Somebody pointed this chart out to me, I believe it was last night. And what a nice looking chart. Nice rounded bottom breakout. Inverted head and shoulders. Setting up very, very nice here. Again, the whole trade, your trade playground. Why can't I remember just to move that back? The trade playground will be from the 50 to the 200 period moving average. Now, this is where we place our trades, take our profits. This is what we worry about. I don't ever worry about it moving higher because this is my trade plan right through there. I'm going to, we'll just call it. Otherwise, this is going to get too long, okay? Yeah. All right. Let's meet up back here in about 25 minutes at the market open. Thanks again for everybody being here. I absolutely appreciate it, okay? Those that were at the class last night, the video is almost finished. My hands are tied. I'm waiting for the whole rendering process to finish up, and we'll get that sent out to those that were at the class last night, all righty? Thank you so much, everybody. See you in about 25 minutes.